And welcome, Michael.
Thank you. Watch and wait as I get this whole thing set up here. Give me a second. I'll give you my contact information in a second. Hey, y'all. Um, so I have a company. It's called Hero Loans, Home Equity Retirement Option Loans. I thought that was a lot easier to say than HECM, and which is home equity conversion mortgage loans. And I'm going to, at the end, I want you to stick with me. And I know this is going to be a lot of information. I'm trying to make it super duper simple. But at the end, I'm going to give you two questions that you can ask seniors in your market to help you help them. Okay. So, what is the biggest market? I know it's rhetorical, but what is the biggest market? Who owns the most homes in the United States?
Baby boomers.
Right. Seniors, people over 65. How much equity is in their homes? Okay, I'll tell you. 12.5 trillion, that's with a T, dollars. $12.5 trillion. So it wouldn't take long to get to fill your pipeline and pay yourself very well, because when you work with a senior, you get two things. You get their trust and you get all their transactions. So once you gain the trust of a senior, you're going to get their trust and all their transactions. Ask Randy. I mean, he's experienced it multiple times. Once they trust you, you're their man or their lady. Whoever they go to, you're the go-to. So I'm going to give you some stats because I'm not going to pick on realtors too much today, but most of them, I'm sorry, just go for easy. This isn't easy, but when you see the statistical process here, you'll understand why you need to make this a big part of your market. So 38% of seniors really do lose their homes to Medicaid. What is Medicaid? Medicaid is the insurance that covers their nursing care stay through the federal government. It's not Medicare, Medicaid. So how it works. It's usually a couple, okay, a husband and a wife, who own a home, and grandma falls and breaks her hip. She goes to the hospital. 3 days later, it's actually 20. They will only allow them to stay in the hospital for up to 20 days. And then Medicare doesn't cover it anymore, but they have to prove to leave the hospital to go to skilled nursing or to go to a facility that they have long-term care insurance in place or $200,000 in assets. If they cannot prove that at that time, then guess what? They get assigned something that's called a Medicaid attachment that says, you can take my house when I die to pay for my nursing care. Well, what if they had $40,000 or $50,000 in the bank or in assets or something? Well, guess what happens? They get to spend all those down to $2,000. They're left with $2,000 and a wedding ring. And this great state of Texas is 75 bucks. The great state of Washington, it's $113 of their Social Security per month. That's all they get. So they basically become very poor. And then the state gets their home. And what happens when the state gets their home to pay for the Medicaid bill? It goes to the HUD.gov auction site. So I was looking at the auction site for a property. It's just north of me, about 30 minutes. Well, everything's north of me, 30 minutes. And it was listed for $431,000. Nice house, looked really nice from the outside. It sold for $278,000 on the auction website. So when the house goes to Medicaid, Medicaid loses. They don't get current retail rates. They're not going to get a regular value. So the next is 40% of seniors have to sell their homes to move into a nursing care facility. You've probably seen that. You've probably worked with those seniors. You know, the kids can't take them in. They'd say, okay, mom, just sell the house. And that's usually one individual who does it. It's usually a mom or a dad lives alone. They get hurt. They can't take care of themselves anymore. And then they sell the house to go into a nursing care facility. Now, remember, there is something called in-home care. And in 2017, when I started doing this loan, they changed this loan completely. That's why I started doing it. But I just want to let you know, in-home care is a real thing, and it's a lot less expensive than selling your house. And they can take care of you in your home if you have assets to pay them, because it's cash or long-term care. So 88% of seniors want to stay in age in place. So do I. I want some cute nurse come in and taking care of me. I don't want to go into a nursing care facility and sit around and wait for somebody to change my diaper. I just don't, right? Now, 95% of seniors want to pass their homes to their family upon death, 95% of them. So that's why I'm soliciting you guys to help me help them, because 78% of seniors are losing their homes. They're losing them. So how can we change that? Let me walk you through a couple of things we can do to help them. Now, the high cost of long-term care or in-home care, high cost of nursing care without long-term care insurance is really about $108,000 a year now for assisted living. That's a lot of money. So that's why they sell their homes, okay? But if they had long-term care in place, they wouldn't have to. Or if they had a home equity conversion mortgage in place, they wouldn't have to. Okay, so what happened in 2017? Okay, that was so important. Well, let me back up just a little bit. Here's why I can talk about this, because I started out of college as a stockbroker, okay, for Bank of America, Wells Fargo, Key Bank. I was in the bank channel. I was a stockbroker. Loved it, loved working with the seniors. My favorite part was when they came back and I was in the branch and they'd sit down at my desk and we talk about how many fish they caught at the fishing hole and how to make the best berry pies and how to raise kids and all the stuff, all the wisdom that you can glean from them. And I just have a passion for seniors. And I then went into the software industry, selling software to big broker dealers and insurance companies. You'll probably recognize some of the names if I say them. AIG's one, Chase is another. So, I was in that field for about 20 years and I wanted to do something for myself. And I had a coach, a business coach, and the business coach basically said, you need to look into 2 or 3 areas that you would fit. And one of them was a mortgage broker. And I just laughed. No offense to anybody like Todd, who is a mortgage broker full-time or even part-time. Like, oh, geez, you could swing a dead cat and hit a mortgage broker. Well, I was introduced to her brother-in-law who just did the old reverse mortgage. And he explained it to me. And I saw it as a financial planning tool, how to use the debt equity in their home to plan for their better plan for their retirement, have more money and income in the future. I was blown away. And he said, well, in 2017, they're going to change it all. And I said, what do you mean? He said, they're going to change it all. We don't know, but we've heard they're going to change it. And they did. In 2017, they killed the reverse mortgage because there's so many myths about the reverse mortgage. And you guys all know that bad news travels faster than good news. So anytime there's bad news, people hear it. That's what they love to hear. This has been changed completely. They kicked all the banks out of this. There's no banks that are allowed to do this anymore. So it's not a for-profit situation. And when Ben Carson in 2017 became the head of HUD, actually 2016, 17 changed this. He said, we need to change this loan so seniors can age in place and not go on Medicaid because Medicaid is broke. So he said right there, we need to help seniors use their equity to have in-home care instead of losing their home to Medicaid. Because if you follow the money, FHA and HUD makes more money when they have a home with a conversion mortgage on it, heck them on it, because the kids then get the house, the kids sell it with you as a realtor and get market price. If not, they sell it on the HUD website and take a loss. Okay. The other thing they did is it's now based on age. So they kicked the banks out. Now it's based on age. 60 in the state of Oregon and Washington, you can do one. 62 is the best age though. You can have 40% of your equity if you're 62 years old. If you're 95, you can have 75% of your equity. So the older you are, the more equity you need or you can have access to. Got it? Really important to know that. They changed that because in the old days, it was 80%. And in 3 years, you go upside down, right? 4 years, you go upside down. Now they also insured the loan. So they force FHA insurance on it. So bear with me. in 2008 through 2012, when the California market tanked and all these people had $1 million homes they'd taken the old reverse mortgage out on, there was a problem. They were underwater when the kids inherited the home, or when the mama wanted to sell the house. It was underwater. Loan value was higher than they could sell it for. So they filed bankruptcy and walked away, or did a short sale and lost. So now FHA insures the loan against that. Really important to know that. So no one ever loses. Okay. You have to be 62 years or older. Has to be an FHA qualified home. Cannot be a trailer in a trailer park. Cannot be renting a space. Has to be their primary residence. Doesn't mean they can't have 5 different homes, but it has to be on their primary residence. And the income they take out of it will not affect their Social Security or Medicare benefits, only if they're on Medicaid. Okay. So let's talk about the 3 or 4 myths, and I'm going to bust all those myths in a second. The first myth is they always say, oh, well, the government gets my house when I die. Okay, that's not true. 2 is the government controls my house. No, that's not true anymore. And 3, I have to make payments. Nope, you don't have to make payments anymore. So all those myths are gone. They keep title to their home. They do not have to make a mortgage payment for life. And when they die, their kids inherit the home. Okay. So they keep title. They never have to make a monthly payment. They're just responsible again for property taxes and homeowners insurance. They have to keep their house in good shape and have to occupy the house at least 6 months out of the year. Now, I have a client who bought a house in Palm Springs, has a house in Portland. He did the HECM on the house in Palm Springs. Now he has to pay taxes out of California because it's his primary residence, but he still has 2 houses he uses. Okay. So we did that for him. But the key is they keep control of their home. They don't have to make a mortgage payment. And when they pass away or when they want to sell it, they just pay off the lien. Okay. Or their kids get the home, and the kids have 6 months plus 6 months, total of 12 months to either refinance it and keep it in their own and do whatever they want with it, or sell it and keep the equity. Now, there's usually about 50% equity or more. 60 to 50% is what we've seen. Equity left for the kids. Okay. So let's go back to my first slide. Remember, almost 78% of people are not passing their homes to their children, but they want to. But they don't know because they don't know, right? So we're going to share with you the information that they can learn how to do that. So it's really important. Sasquatch is not real. Those myths are not real. If they go to the HUD website, or if you do, and if you want my cards or any type of business information or any type of flyers, we can do that for you here too, okay? Go to the next. So why does the house pass to the kids and not the state? Well, because there's an agreement within the loan that says upon your death, it goes to your heirs through probate, or never through probate. It goes to your heirs through your will or whoever's assigned. Okay. That's important. So when you pass, it goes to your kids, let's say. Your kids have 12 months to pay for it. But look at this. What if they fall down later and break their hip and they don't have enough money? And they have to go on Medicaid, or Medicaid starts paying for their nursing care. Well, Medicaid's in third lien position. Kids get the house first. FHA gets paid. If there's any money left over, it's the kids' home. They can decide if they want to pay Medicaid or not. It's true. The kids can keep all the equity if they want to. Okay. So they can take a lump sum. They can do a line of credit, or they can take monthly loan proceeds. So if you sell them a house, we can refinance it if rates go down, okay? And they can pull money out as they need to shore up their expenses in the future. Does that make sense? Any questions?
Yeah, Michael, you said on that last slide that Medicaid is in third lien position.
Yeah.
So how, explain that. How do they get, when you sell the home, how is there clear title?
So here's how there's clear title. It's retitled in your name, Randy. You're the child.
Okay.
It's your house now. And since it's your house, any debt that's in your dad's estate is his debt in his estate. The house is now yours. So it moved out of the estate. So how do you get clear title is you're required to pay FHA off. That's it. Medicaid cannot attach the house when we have this on it
When
because
it's
there's no equity.
title,
That's how we get clear title. There is no, unless Medicaid put the lien on it before they did the home equity conversion mortgage. Because when Medicaid looks at it, let's go back to this. A $200,000 home looks like there's $600,000 in mortgages on it. Because at title, let's say you have a $200,000 line of credit that's yours or debt on it that's yours that you use the money. It looks like $330,000 or more, $400,000 on title because they base it on your age, life expectancy of 105. So only 200,000, but now it looks like 300,000 on title. So Medicaid says, oh, there's no money left. Answer your question?
Yeah.
I'll poke out a little bit more. If that didn't, please let me know.
no, I got it.
Okay. So when you do these loans, basically, title takes the loan and bases it on their life expectancy. Because I've had clients call me after they read their title docs and it says, you have a $400,000 lien against your home. And I said, that's what it looks like on paper, but it's only the loan amount. But on paper, it looks like life expectancy of $400,000 in that example. Okay. So you guys know this, seniors want to move. Seniors do not want to live in that beat up old house. Seniors cannot afford to continue to take care of their homes. The average expense to maintain a home is 19% of your budget every year. And what does that mean? That means your roof, your siding, your yard, your taxes, your insurance. It's very expensive to maintain a home anymore. And most seniors do not have that money in their budget. Let me give you an example. I was in Portland, Milwaukee to be exact, about a month and a half ago, and I was driving by down the street, getting to the highway. I always passed this house that I thought was so cool. It had a pool. It had a tennis court. It had arborvitae all around it. But I could see through the arborvitae now, and I see that the tennis court was in shambles, and the pool wasn't full. It was green. It had just junk all over, broken tiles. And I looked at the roof of the house, and there was tiles coming off the roof. You know, they hadn't roofed it in years. I'm thinking, this is an elderly person who doesn't have the money anymore to maintain this home. A realtor needs to stop by and ask them if they'd like to use this loan to downsize. Because almost all of them, 64% of them, want to downsize, go to something easier, right? And that's what we're looking for. You're looking for grandma and grandpa who cannot maintain a home any longer, who want to downsize to something nicer. Okay. So let's look at some numbers. Now, this is an example. This is not current interest rates, but it's very close to how it would work. On the left-hand side, you have somebody who has a $500,000 home that's paid off, and they sell it. No, they have $500,000 in cash, but they are working with you and they want to downsize. In this example, let's call it a condo. A $350,000 condo for them is only going to take $206,000 in down payment. FHA will loan them $143,000. So now they own a $350,000 home with a $143,000 loan. They keep title to it. They do not make mortgage payments on it. And when they pass away, it goes to their children. Right? So why tie up all your cash? And that's what you're going to ask one of your clients. Now they have $293,000 left in the bank from the sale of their big house. Pretty cool. They only have to put about 60% down on the new home, and they get to save 40% and put it in their pocket. And you got both sides of the transaction, which is even better. Questions? Thoughts?
Question.
Go for it.
Can, so we've got a parent that's living in their home. They want to downsize, or they want something that they can maintain easier.
Right.
Can they do a reverse mortgage build an ADU on that property, move into the ADU, the kids move into the house.
Yep, FHA is accepting ADUs now with these loans. Yes.
So it's the kids move into the house, care for their parent.
Yep.
They built an ADU. Is there no house payment?
No house payment. Lady in Portland do the same thing. She was over on Hawthorne. I think I've told you this story. She's over on Hawthorne Street, and very popular Airbnb area, right? So she knew it. She was smart. She did the home equity conversion mortgage, took a big chunk of change, built an ADU on her property. She lives in the ADU and rents out her house. No payments.
No payments.
No payments. Just cash flow from the rental.
Interesting.
Or in your situation, same thing, no payments. And then you would inherit the home, right? Upon death, and then it's your house you to refinance and keep.
Yeah.
Or if you're old enough, do a home equity conversion mortgage on it as well with no payments. Because cash flow is king. Here's another example, and this happens a lot where people actually step up. Okay. So they have a $700,000 home, they have a $200,000 mortgage, you sell it for them, they have $500 in cash, they go buy a $500,000 home, but they only have to put down $254,000 or 60%. Now they have a $500,000 home with a gated community, pickleball, a pool, somebody takes care of their house, front yard, backyard, they're happy, right? And they have money in the bank. So I did one of these for a lady not too long ago. I don't know if you've heard this story, but she has 3 kids. Her situation was her and her husband had lived in the family home for years, beautiful 2-story. And it was in Salmon Creek area. And he had had a stroke 2 years prior, and he thought he was going to get better, but he really never got better. He still hadn't increased in stamina, and he was still dragging a leg, and it wasn't good because they lived on a sloped lot. So they had to mow the lawn. She wasn't capable. He wasn't capable. So the grandkids would have to come over and do it. They had stairs. So they lived in the basement instead of going upstairs. And so their lives changed a lot. And they knew they needed to downsize into something single level. So I ran a proposal for them. This is what the proposal looked like. The proposals are worst case scenario. Top right says expected appreciation value rate on their home is only 4%. Well, that's not true, but that's just the way FHA runs these scenarios. It has to be worst case scenario, very low. And also 6.26% interest on the loan. And we're showing them that even if you don't refinance on this amortization page, and you have a home, you have a loan now in 10 years when you get hit by the bus, it's $533,000, and your home only appreciated at 4%. It's almost $1 million house. The kids still get a lot of money. And that was one of her son's issues. Well, Mom, you're leaving us with nothing. It's going to eat away all your equity. Well, the reality in Salmon Creek, they actually moved out to Hawkinson, nicer area. The home's appreciated 8% on average. So this would be almost a $2 million home. So the kids would get almost $1.5 million in reality. So the kids still get money. And that's really important. There's equity left. And by the way, we can refinance these every 13 months if the rates go down in the market. So that's important to know too. So then people say, oh my gosh, these loans are so expensive, right? So expensive. Well, expensive in comparison to what? So I'm going to pick on you guys as realtors. So if there's a 5% fee and a 2% tax, that's 7%. That's expensive too, right? So in this example, the financial advisor was complaining that the mortgage insurance fee, it's a one-time fee, was too expensive. And I said, expensive in comparison to what? If you sold the house, that's a 7% fee. This all ends about 3.5% on the home's value, 3.5% fee. That's 2% for the insurance fee. And then he was complaining it's too expensive. So I said, let's get together. But before we get together, can you get a quote for the 70-year-old lady, your client? Get me a $400,000 life insurance policy for her. Get us a quote, okay? And then we'll compare what's expensive and not. Now, he didn't know that I was a past financial advisor and sold a lot of life insurance, but he figured it out eventually. So 13.5 was her expense that came out of her equity, not out of her pocket. So I said, what does the $400,000 policy cost? Because at that age, you cannot buy month to month. It's single premium. You have to come up with cash one time. So it's at $324,000. So they're not expensive. If you got regular insurance, that's very expensive. So I said, what's going to be more affordable for her? The 13.5 that FHA is charging her, or the expense of a single premium life insurance policy, $324,000. Of course, he laughed. We moved on with the transaction. So the other thing is loans are expensive, and anybody who gets a loan in their 60s or getting ready to retire and gets a loan, that's a lot of cash flow out of pocket. They're going to lose $343,000 on average with a 4% interest rate. So remember, there's no payments on these loans, and they don't accrue that fast, as you can see from our amortization page. Okay. So the biggest market is seniors. How do you touch them? How do you reach them? You have to ask them questions. You have to befriend them. The two really important questions to ask is your plan to leave your home to your kids when you pass away? 95% are going to say, yeah. And you can go into, well, most people don't. Most people leave their home to the nursing care facility or to Medicaid. And then the other question is, would you like to have more money in savings in retirement? Oh, yeah, of course they would. So that's where you step in and say, well, I can help you get out of this big house that you can't manage into a smaller home that you would like to be in, where you can pick out your own colors. Maybe it's a new build, which that's where most of them go, or to 55 and over community. Okay. So now you can help them by explaining the new reverse mortgage, the new home equity conversion mortgage will help you downsize. You only have to put 60% down payment, and you keep the rest of the money in your pocket. When you pass away, the home goes to your kids. And now you can live in a house that you like and want with no mortgage payment, and you control the title. You just have to pay your property taxes and homeowners insurance. The biggest market out there is ignorant. That's the problem. They don't know what they don't know. So if you can share with them, ask them these two questions and open the door, just open the door. Eventually they're going to downsize, or they're going to be forced to sell and go into a nursing care facility or lose their house to Medicaid. But if you can get them before that, you are going to get two transactions, and you're going to get their children as well down the road, right? Because you're probably going to list the house. So potentially 3 transactions. So the homeowners out there with all those homes that we know first-time home buyers would love to have, let's ask them these questions. Let's build a marketing campaign. Let's have happy hours. Go buy lunch for people, and do a lunch and learn. Anything. Go to the senior communities and help them understand that there is a loan out there for seniors designed just for them. That can help you downsize into the home you want to be in, save money, and not have payments. They don't believe it's true, but once they get the information, I'll give them information, send them to the HUD website. They can read it themselves. You'll have a lot of great clients out there, because once they know you as the person who helps downsize, it's a big deal. We've got a guy here in Dallas-Fort Worth. That's all he does. He's done pretty well. He's done pretty well for himself. So those are the 2 questions. Okay. Brian, I'm going to pick on you because I see you. You're the first guy on my screen. What were your thoughts on this?
Oh, sounds like something that could definitely be really useful. I'm gonna, go with some of my senior prospects. Actually, I've had a lot of experience working with seniors in the past, so it's something that, yeah, I like the information.
Yeah.
try to ask a question actually. So one question I'll ask is, sorry about the loud background noise.
Can't hear it. I only hear you, which is good.
So you said afterwards, the children, so they have whatever equity is left over, and then it goes on, they have to pay the FHA, and then it goes on to Medicaid. So
It doesn't go on to Medicaid unless Medicaid was there first.
okay, because they were the third in line. That's what I got from that.
Yeah.
And so you said also the FHA insures against if their home is underwater for the children. I was just kind of wondering like what that would look like.
Remember that expensive insurance premium, or the financial advisor said that was expensive? That's a one-time insurance fee that goes on the property. Yeah, comes out of their equity.
Right. Okay. Got it.
And that's why people say it's expensive, but it's really not. 2% to insure your home for life, that your kids don't take a loss. That's nothing. It's a lot cheaper than life insurance.
Yeah,
And
for those 64% that want to downsize, this could be very useful.
yeah, it
Absolutely.
is very useful. And the other thing is, how about all that money they're going to save and put in the bank? I have financial advisors up the wazoo because I know them all, right? You can say, hey, Michael, thank you for helping with that transaction. We know they have this much money left over. Can you send over a financial advisor to talk with them about final expense or maybe long-term care insurance or income producing products? I can send over financial advisors who I trust. Okay, I don't send over everybody who I trust. So I work with a very small niche of people I trust. So, and we can help them make sure that they have cash flow in retirement too, which is good.
Absolutely.
Yeah.
Thank you.
You bet. Todd, any questions from a professional like you?
No, but I can definitely tell that this is your specialty because I have access to reverse mortgages, but honestly, I'll probably just refer them to you because I I have the most cursory understanding and I like the two questions to ask the seniors. I didn't even have that in my repertoire. So
Yeah.
no questions, just really good information.
Yeah, they're fun questions to ask because it just opens up a Pandora's box for them, right? It
Right.
makes them start thinking. And I think it's great. And I will say this, that a lot of mortgage brokers steer away from these, and I get it, because it's like driving backwards the whole time. The paperwork's hell. It's no fun to understand it, to explain it. It's very difficult and very challenging. So, and I don't do forward mortgages anymore. I won't. I'll refer them on because yeah, too much. It's out of my specialty. I just don't do them anymore.
Right.
And I will say this, guys, the other person to team up with, if you can create a team, downsizing team, one of it should be a trustworthy financial advisor. Because they know when their clients need to move. They know when their clients are having issues with income. They know how much money's coming out of the brokerage account every month. So they're a good person to team up with to talk about this downsizing, because their ears peak and they'll go, oh, that sounds great, because, oh, you mean you can sell their $700,000 home and move them into a cute community for $500,000? And now I have $300,000 more to work with for them in their financial plan. They get very excited. So it's a win-win for everybody. So find some financial advisors who are good. And that's a really important, RIAs are best. Yeah, I have a list: LPL, Raymond James, those are the best ones to work with. And then Ed Jones is second, but Ed Jones is very restricted in giving information or sharing referrals. So just FYI.
I have a gentleman, Michael, that is 71, is working part-time, still has a mortgage, and is working part-time just to supplement.
Yep.
And I spoke to him about, looking into a reverse mortgage, and gave him the benefits that I felt he would receive from it. And he didn't hear a word I said. When I said, have you ever looked into a reverse mortgage? He says, never get one. I'd never get a reverse mortgage.
Yeah,
Says,
I
"Well,
know. It's
yeah, I says, well, tell me why. And he actually referenced that he was like, well, I'm not gonna get a mortgage that I hear advertised on TV from, I don't know who the person was. But
Tom Selleck.
yes,
Selleck.
yes. And so I says, well, I says, a lot has changed. I says, you're gonna have equity. You don't have a house payment anymore, which is equity to you immediately, because you don't have to work if you don't want to, because he was working just to cover that mortgage expense. And so anyways, wouldn't hear of it. Wouldn't, I was like, all right, well, he wasn't going to be interested today. And I says, it might be something you just talk to someone about. You don't have to work anymore. And
Yeah,
so I don't know, is that a common, I would imagine that's a,
that is very common.
yeah.
And they usually don't say, oh, Tom Selleck. Um, they usually say, I heard from my aunt's uncle's brother, blah, 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 that they're bad. And they took their house from them. So I always start the conversation with, have you heard about the new reverse mortgage? So that helps, because I'll tell you a sad story. I was out seeing a lady in Fort Worth, Texas here, and she had a $175,000 home. And somehow she didn't sign for it, but now she has solar on her house too.
Well,
And so they wanted to make payments. Now they ruined her credit, blah, 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 blah. So I came into the house and she's watching her great grandchildren, who are 3 and 5. And I walked into her house. She showed me the house, the place is ruined. And I said, well, situation like yours, you don't have to sell. You could stay and do the home equity, the new reverse mortgage, and FHA will pay for all these repairs using your equity, because you couldn't afford to pay for them yourself. Because they require the floors be in good shape, no trip hazards, the roof be in good shape, right? All that stuff. They'd yank the solar panels off, blah, blah, blah. And she's like, oh, that sounds really good. But my son doesn't think they're a good idea. I said, well, tell me about your son. Well, he heard from his friend that the friend's grandparents' house was lost. Well, I would say this, in the old days, probably. Before 2017, probably. Because the banks wanted to make money and they wouldn't let you refinance to lower your rate. Well, now we can refinance them and lower the rate, which is a benefit to the client, right? And so I said, well, let's have your son here, HUD.gov, HUD.gov. Think of this, guys, write it down, HUD.gov. Go search the word HECM. I wrote it on the proposal for him to review. And I said, let's have him at the appointment of Tuesday at 5 o'clock. I showed up. She wouldn't meet with me. Her son said no. The first thing I thought of, and Randy, you appreciate this, is a cycle of poverty. That cycle of poverty is going to continue in their family because they're stupid. Excuse my French. They're just stupid. They don't even want to read and get information on their own. So she falls and breaks her hip. She'll go on Medicaid. She has nothing else, right? Not a dime. They'll take the house. He'll get nothing. Because average stay in a nursing care facility is $200,000. So we can break that cycle of poverty, which is why they changed this loan. So your person who's going to downsize is going to have extra money. The kids are also going to get the house. The house has equity in it. The equity is going to go to the kids. It's going to keep them from being poor. Let's break the cycle of poverty. Let's help these people understand that there is a new reverse mortgage and it's going to help them. It's going to help them live a better life in retirement. It's going to help them have cash flow. It's going to help them. And if I told you guys that if you took 500 milligrams of vitamin C, took 5,000 milligrams of D3, and took a zinc tablet every other day, that you live 20 more years, would you do it? Mm-hmm. Right. And I give you the research showing you would, and you'd read it and say, you're great. Same thing. The new reverse mortgage helps seniors. If you can share that information with them and say, you can live a better life in retirement, in a better house, in a better situation, have money in the bank, why wouldn't they do it? Well, they just have to be educated. So that's your guys' job. Go out and educate as many people as you can, overcome the silly objections. They keep title to their home. They don't have mortgage payments. The house goes to their kids and it's insured if it goes upside down. There's no such thing as Sasquatch. There's no such thing. So break the myths, help your clients ask these questions, and you guys will start to take over that market because that's a huge market. Senior market is ginormous. And we are doing ads to them, Facebook ads. We are doing marketing campaigns, mailer campaigns with realtors. So if that's something you want to do, follow up with me and I can help you. We can design something that you're comfortable with, and we can help you with the flyers, the information, and even some of the ads if you want to do an ad on Facebook. One of the ladies I was working with in Beaverton, she just ran with it. We weren't even tracking her callbacks or her ticks. She got 3 people out of her own market in one day when she ran her ad.
Very good. Michael, thank you. Make sure you get your, oh, there you go. I will,
Your time, I appreciate you, Randy, letting me talk to them again.
yeah, no, absolutely. This is good information. And I think, I know I've recommended you and it's helped clients of mine. And I think for the right person, it's the right incredible product. And I guess I
It
hadn't
is.
thought about the fact that, especially if kids want to bring their parents in to help them take care of them, having that ADU and removing a house payment, it's really, that's pretty remarkable way to take care of your parent and remove some of the financial burden while you're doing that.
Yeah, I would agree. I would agree.
All right. Well, if there
Thanks,
isn't
guys.
any other questions, thank you, Michael. You guys have a great week. Please reach out to me if I can help you.
All right, bye now.
Bye.